If you owned all the Bitcoin in the world and offered it to me for $25, I wouldn't take it.
What would I do with it? With these words, Warren Buffett cut to the heart of his criticism of Bitcoin.
The Oracle of Omaha's stance is clear and uncompromising. Bitcoin produces nothing. His infamous rat poison squared declaration at Berkshire Hathaway's 2018 annual meeting wasn't mere hyperbole. It reflected his fundamental belief that Bitcoin lacks what makes an investment worthwhile, the ability to produce value. His longtime partner Charlie Munger echoed this sentiment, describing Bitcoin trading as just dementia. Buffett's investment philosophy, developed over 7 decades of successful investing, centers on a simple principle: buy productive assets that create value regardless of market sentiment. He illustrates this with personal examples from his own portfolio. "I bought a farm," he explains, "because I thought it would produce reasonable returns through farming. Every year the farm produced something, corn and soybeans. You can use it to produce, and it will produce for you year after year." The contrast with Bitcoin couldn't be starker. Cryptocurrencies basically have no value and they don't produce anything, Buffett argues. They don't reproduce, they can't mail you a check, they can't do anything. And what you hope is that somebody else comes along and pays you more money for them later on. But then that person's got the problem. This gets to the heart of what Buffett calls the greater fool theory. Bitcoin investors, in his view, are simply hoping to find someone willing to pay more for their holdings. It's not investment, it's speculation. You're just hoping the next guy pays more, he warns. And you only feel you'll find the next guy to pay more if he thinks he's going to find someone that's going to pay more. Interestingly, Buffett doesn't dismiss the underlying technology. The blockchain is ingenious, he acknowledges. But Bitcoin has no unique value at all. This distinction is crucial. While blockchain technology might revolutionize various industries, Buffett sees Bitcoin itself as merely a speculative token. The environmental impact of Bitcoin mining, which consumes as much energy as entire nations, adds another layer to Buffett's skepticism. This massive energy consumption conflicts with sustainable business practices, a principle Buffett has increasingly emphasized in his investment approach. Regulatory concerns also factor into Buffett's criticism. The cryptocurrency market's vulnerability to fraud and manipulation, coupled with limited oversight, creates significant risks. In terms of cryptocurrencies generally, I can say with almost certainty that they will come to a bad ending, he predicts. Instead of Bitcoin, Buffett advocates for investments in productive businesses, real estate, and farmland, assets that generate value regardless of market sentiment. If you buy something like a farm, an apartment house, or an interest in a business, you can do that on a private basis, and it's a perfectly satisfactory investment. You look at the investment itself to deliver the return to you. The current Bitcoin fervor reminds Buffett of previous speculative bubbles. What you're seeing in Bitcoin is exactly what you saw in the dot-com era, he warns. His famous advice to be fearful when others are greedy, and greedy when others are fearful, seems particularly relevant in the cryptocurrency context. The fear of missing out, or FOMO, drives many to Bitcoin despite not understanding it. Buffett's response? Never invest in a business you cannot understand. He sees the cryptocurrency rush as emotion-driven speculation rather than rational investment. Buffett's message remains consistent: focus on investments that create real value rather than those that rely on someone else paying more later. Risk comes from not knowing what you're doing, he cautions. Whether one agrees with his assessment or not, his track record of success through multiple market cycles demands attention to his warnings. His final verdict? In terms of cryptocurrencies, I can say almost with certainty that they will come to a bad ending. If you could buy a lot of Bitcoin or cryptocurrency, you're essentially betting on the price going up. You're not investing, you're speculating.